Good morning. It's Wednesday, March 5th, about 5:30 a.m. Central Time. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So a lot of people were watching President Trump, his speech last night and everything else, wanted to know what he's going to say about tariffs, things like that. Everybody already knew what he was going to say. The thing to be watching was China and Xi Jinping and what he was saying here at his press conference as well, because that's where all the action is at. And if you trade the precious metals, that was much more important than anything that President Trump could have said. So let's get you ready for the trading day. Let's look at the precious metals. Let's look at the commodity market. So looking at the precious metals overnight, futures are higher here. Looking at the overnight ranges, you do have April gold up $3.60, slightly disappointing. 29.24 here. The overnight high 29.33, the low 29.12. Your pivot point on the day is going to be 29.17. Looking at May silver, and this is where things start to get interesting. Up about 1% right now, 1.39%, 44 cents higher, 32.82, getting up to 32.98. That was an old resistant point before, and your low on the overnight session was 32.39. Where all the fireworks were at, where I was saying that it was really important to watch, is that copper market, because copper is the primary focus, the primary metal of China here. And when you get the industrial metal move going higher, you get gold futures getting some kind of momentum behind it, you get the 1-2 punch on the silver market, and that's how it really starts to explode. So back up near the resistance point, $33 on that silver market, coming off just a bit. Saw a lot of traders overnight taking some profits on some of those gains here from buying in those low 32s and identifying that pivot point yesterday, which was right around the low of the market here, 32.15 or so, going up to about that 32.50 to 56 area. Saw a lot of people trade in that range there. So you got copper futures up about 5%, explosive move, 477 last, high of the overnight session, 480. That was an old resistance point and traded almost close to longer term support. 450, 465 being the low, 450 is a line in the sand. I did a trade recommendation on CNBC about a week ago covering the copper market. We were looking at putting positions on near that 450 level, stop down at 435, targeting 480. So it looks like most of that here has been achieved on that outlook. You get into aluminum futures, slightly higher, up about 1%. Platinum up about 0.8% here at 979. Palladium at 957. And the gold silver ratio, 89-1 here. So your ETF buys on gold and silver. And I must say that all the trading action in the silver market is in the futures markets. It's not in the ETF markets. You look at the ETF flows year to date, quite stagnant, where the future flows have really come up. And we're starting to see that open interest rise and a lot of participants coming into that market. So you get into the ETF flows, they actually did cut some of their holdings here on gold here yesterday, down about 45,000 troy ounces, bringing this year's net purchases to 2.91 million. You saw ETF flows on the silver market, cutting those to 1.76. I think that it's a lot of people that look at the U.S. equities, because when you're trading ETFs, a lot of times that person has other stocks in their portfolio. They have mining stocks in their portfolios. A lot of times these mining stocks are impacted by the sell-off in U.S. equities and individual stocks as well. Many of these miners mine different things. They also have geopolitical and also geographical risks here, especially with tariffs and things like that, that could really weigh into it. That's why I always say if you want the pure price play, you go with the futures contract. And remember, there's 1,000-ounce silver, there's 10-ounce gold, there's 50-ounce gold, there's 100-ounce gold. You name it, you can create it here as far as implementing risk management and things like that. A lot of people are worried about leverage and margins. These aren't the days of the 1980s where they only had the 5,000-ounce contract and the 100-ounce gold contract. They've got smaller denomination contracts, just like on the U.S. equities. People looking to hedge their portfolios. A lot of people coming in yesterday, day before, shorting micro S&P, micro NASDAQ, micro Russell, micro Dow against all their positions here to put some hedges on in these markets. So looking at some things here, you do have U.S. equities taking on President Trump, his speech here, and things like that with a little bit of optimism, up about 0.5%. But these markets have seen some big rug pulls as the market unfolds and as the day starts to set up. We have a lot of data coming out today. We'll see if that has any impact on these markets. Now, back back to what I was talking about and what I was watching, because I was literally looking at my phone and looking at copper prices at 1 a.m., 1:30, 2 a.m., texting back and forth with my partner, Bill Baruch, in the wee hours of the night, because commodity guys, that's what we do here, because these commodities are global here. So China, they set a bullish global growth forecast of about 5%. And that comes despite the U.S. tariffs here. So China, they set their economic growth goal of about 5% for 2025 with a fiscal deficit target of 9.9% of GDP. That's the highest on record. They also set their inflation target at 2% here, citing some deflation within the country. So they're going to have, if they have lower inflation, they have higher growth, they've really got a robust economy going on right now. At least that's what they're projecting here. So the government plans to boost consumption with some special bonds to fund public spending on infrastructure and other areas. Infrastructure is the key word here, and that's where you get things like copper up 20 cents overnight at 476. So the growth target is likely going to require more stimulus. That's where things start to pick up, as well as the policy makers. They need to contend with the domestic challenges, the deflation, the property sector having its problems, and the trade tensions with the U.S. So copper prices, they did surge here. And also with President Trump having a 25% import tariff, at least the metal could have that, you're seeing a frenzy here where people are trying to get, the end users are trying to get as much copper as possible, and they're buying up the domestic supply that's out there right now. That's where you get the COMEX stockpiles. They continue to draw down here, and then also the LME, those requests to withdraw, those are surging as well. Now looking at the agricultural markets, because this is interesting here, the grain markets, they actually halted their slide here as there are signs that the U.S. may ease these tariffs here on Mexico and Canada. So the Commerce Secretary Howard Lutnick suggested that potential tariff relief on Mexico and Canada is quite possible here. So this could come as soon as Wednesday. So a lot of going back and forth, ping-ponging as far as these tariffs are concerned here and the direction of it. That's why it's important when you get this heightened volatility in these markets, you pare down your position sizing. That way you can adjust your stop loss and your risk management properly here. So you get wider swings, and you still have, because of the higher average true range, you still have that risk reward ratio back in balance, and that's what's really key here. So you look at the currencies, this is interesting as well. The dollar index, it is continuing to slide here at 105.07. The euro currency, 106.88, going as high as 107. So where these things were going back to parity, now they're breaking back out to the upside. And traders are betting that the euro is going to surge another 10%. So this is what we're seeing here, is that there's expectations out there that the euro could rise to at least 120 here. That's the last time it's been seen, was in 2021. So the hedge funds, they've been buying options, and it's not a recommendation here. This is just an observation. Everything on this channel is an observation of what's going on. If you want recommendations, you open up a futures trading account with Blue Line Futures, and we'll help you out there. So hedge funds are buying options that the euro will reach that level in 6 to 9 months. So the sentiment has turned the most bullish in about the last 5 years. The euro is up at 107 right now, and its biggest 3-day gain since 2022. I looked at the open interest in some of these options that they're talking about, and people are actually buying 110, 120, 130 call options going out there. So again, not a recommendation, just an observation. So some things to look at technically on the gold market here. Like I said, slightly disappointing. We need to get a close over 29.3140. That will flip it from neutral back to bullish momentum. A lot of people are coming in. They're starting to play that market back to the upside with stop losses below that 4-day sell-off here. So 29.20 kind of continuing the rally. Need to get over 29.50 to 29.70. That takes it back to the all-time high there on the April contract. And I think that you'll get that target up at that $3,000 level, and that could be a resistance point. So a lot of people are looking at, stop losses, things like that, you really got to look at that swing low where we've been. Now, silver running in a resistance, $33. Got to get above there because it's just a pocket of air when you get to the silver market from 33 on up to about $35, really $34. So your trend reversal point on silver is 33.50. So just a big sell-off here, came down to the 50-day moving average around 31.80 and started to turn back up here to the upside. I did some analysis and some thoughts on the silver market as far as long-term here, and I really believe, and people, they'll disagree with whatever. They've got different time frames. They've got different agendas and stuff. But I always look at this stuff very objectively, right? I have no real emotional connection to any of these futures contracts. You can go long as easy as you can go short on the futures markets, and you can make a lot of money going both ways here. So long term, I think really year end, you could see about the $36, $38 silver. And I think that what's important to silver is that you don't see the U.S. equities completely fall out of bed, because silver, as you can see, can really give up its gains quite quickly. In just a few trading sessions, we saw silver go from about $33.50 down to about 31 and some change. You saw gold futures fall about $150 in just a few days here. And the average true ranges are really starting to pick up. So, it's something just to keep an eye on. I think that gold is silver's main support. So you don't want to see gold futures stop that momentum rise up to 3,000. Where you get the higher expectations, where you get the $40, the $42, you have to have that industrial demand, you have to have copper going up, and you have to have gold going up. You have to have all three ponies in the race coming in with that trifecta in order to get that robust growth. So I think that gold's biggest threat is that all of a sudden you see central banks changing policies, changing their stances here on monetary policy, and also changing whether or not they're adding gold to their reserves. That's really been important. It's been one of the main drivers, is the central bank demand on the gold market. I think that when you get back to the silver market, we have had a trend reversal back higher on the charts. There is discussion about industrial demand picking up. Something else on the silver market is when you get that 91, 92, 93 to 1, that's the point that people start to look at silver a little bit more, and they start to allocate a little bit more because of the fact that it is in such a disconnect from gold prices and the gold silver ratio. Something else you need to see is really that investor interest come into the market, because I talk to a lot of coin dealers, and at certain periods of time there's just no demand out there, whatever, or there's periods of time where people are just selling on that market and they're not really buying here. So that's something that you need to keep an eye on, and you need to keep a focus on here. And if prices get too high, does it impact the demand, and will the demand drop? So remember, silver is not that safe haven play that we oftentimes see in the gold market and also in the bond market here, and that correlation to the U.S. equities really poses that threat to the risk. So I think your long-term support on the silver market is that 30 down to $28 area. I think that's your critical level of support. And the question again is, what does silver do when gold finally hits $3,000? Is it going to be the gold-silver ratio still at this 89, 87, 86 to 1, or does it break loose? Does it go free? Do we see the $38, the $48 to the upside? So it's all going to have to wait and see. But if you got any questions, give me a call, 312-858-7303. Remember, futures option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.